Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. We talk about undervalued assets and possible potential investment opportunities. I know we've got a lot of pullbacks going on right now. We've got oil pulling back, uranium's pulling back. Some of the technology sectors are pulling back. We're seeing a lot of pullbacks in the market. And I just wanted to talk about pullbacks in general. So this presentation, it's called Large Pullbacks and what my thoughts are around large pullbacks. So new investors, and I was in this group myself at some point in my investing. What is tough about investing is a lot of the money is made on the purchase. If you choose to buy volatile companies, they tend to go up and down a lot over time. And that's what gives them that definition of volatile. And I understand that new investors do like to chase price. So if you got caught chasing price, you bought at a higher purchase price, you kind of chased it up into a higher price zone. At some point, in your investing, you will be down large in some of these positions. It's just a fact of life. It's the fact of investing, and you're going to have to get used to it. I mean, you're going to be down. It's going to go up at some point, and then it's going to come back down, and it could be substantial. It could be a 50-60% pullback. That is going to happen. So what do you do when that happens? Let's say you're down large on a position and you're doubting your position now because you're using price to validate your reasoning. And I want to tell you that price does not validate your reasoning. If the value is still good, you should be cost averaging in. That's what the smart, prudent investor would be doing. They'd be cost averaging in and be using value as their guide, not price. If you're a new investor, you are probably going to want to buy when you feel like it's the worst time to buy. You're going to have to go against your emotions, and you're going to have to start using logic. And some people, they are more emotional than others, and they see their investments go down and they want to sell out. They think it is a bad investment. And what you end up doing is you get whipsawed around where you always sell when you're down in your positions, which means you're always losing money. And that is a new investor mistake. So I'm going to tell you what I do and what my approach is. So my approach, I would not be buying into weakness and hoping it works out. I would try to wait for a bottom and buy into what looks like strength. If the valuations are good, I buy into strength where the chart looks good, or we've got some sort of bottoming pattern in place, whether it be long-term or short-term. The absolute bottom is not important. It's about making sure a bottom is in place and buying into strength if you need that emotional support and you need that instant feedback of seeing something go up. It is much easier seeing gains and buying into strength than it is to continue to cost average into a losing position. If you buy into weakness, you would be buying before a bottom has occurred and could accumulate pretty good losses, depending on what you're buying. If you're doing it in precious metals or some sort of commodity where you're buying the physical commodity, I'd be much easier doing that than, say, buying into weakness of a company that could potentially go bankrupt. So the commodities are a little bit different than the companies, and I wait for bottoms and things to look very good in a company more so than a physical metal like silver or platinum. So take time to accumulate and accumulate over some months to gain a position if we are seeing weakness. You're going to have to be patient. Look for support levels or turning point in candlesticks. No one is going to be perfect and expect to be down in some positions. It's going to happen no matter what. Cost averaging in reduces volatility risk and can reduce cost basis. Can reduce. Sometimes if you have a good entry point, that's when you really want to put your money where your mouth is if the value's there and the setup is good. But if you're buying into something that's already gone up quite a bit, I would be a lot less likely to be just jumping all in at once. And I know sometimes that's hard to do because it feels like you have to be invested 100% of the time. And you don't have to be. So for pullbacks are normal and they're going to happen. You will see your account go up and down at some point, no matter who you are. It's happening to me right now, just like everyone else. It's part of the game and unavoidable if you're a long-term investor. This is an area where you need to focus on value and not price movements. And again, stay focused on the goal. Stay focused on value and your time frame when investing. The name of the game is share accumulation when value is cheap. Know the game you're playing. This isn't about making money in the short term. It's about accumulating shares when the value is cheap. Stay focused and disciplined on your investment strategy and time frame. Here is platinum. I'm going to go over an example of where I was purchasing. So I was purchasing in these red areas. They were cheap. We had a little pullback here. I was trying to buy and time my purchases as best I could in these areas for platinum. They had low premiums. Not many people were buying platinum, and I thought it was a very good price. This is $800 here. This is like $900. So I was buying all in these kind of circular red areas all throughout those months, trying to cost average in. So in 2019, I had purchased some good, a good amount of platinum. And then we had the COVID sell-off. I got caught in it. I was substantially down. If you were looking at it here, it was $650 an ounce, and I was buying at $800 and let's say upper 800s in here. And I got caught and I was down in my position. Did you know what I do? What did I do? I didn't worry about me being down. I focused on the value. I focused on the cost curves. I focused on ratios, and I said, this is an opportunity to buy. I was right back here for buying, and we just got a better opportunity to buy. So what did I do? I bought more. I traded in other metals. I did everything I could at the bottom down here in March, April timeframe to take advantage of this low price. And I bought and I bought and I bought and I bought. Cost averaged in. Now we're back up. I cost averaged in again here before I thought this was the last good buying opportunity. And we're heading on up. So on all of these positions, I am up. But on a lot of these two positions here, I was down quite substantially down here. That was a good pullback. And I did the right thing. I bought as much as I could because I've seen this before. I'm disciplined, I'm patient, and I'm going to accumulate when the valuations and ratios tell me to accumulate. And that's what I did. And I bought a lot of metal at a very good price. Thank you for the pullback. So technical analysis, when looking at the big picture, the momentum is shifting and the price will go higher in the long term. But we are entering a short-term pullback. That's what we're currently seeing in gold, in silver, in uranium. It looks like that's pulling back. We've seen a little pullback in oil, and perhaps it's going to pull. We're going to see pullbacks be sustained a little bit longer. Maybe not. But what I'm focusing on is value and strategy, and I'm looking at that ratio. I am salivating at this opportunity if it comes to add into these positions or companies for cheap in some of these sectors. Whatever sector pulls back and gives me the best buying opportunities, I am going to take advantage of those buying opportunities. So I'm going to buy this dip if it occurs. If it occurs and how long it occurs. It's already occurred in some areas. And if it pulls back more, I'm going to continue to look at the best opportunities and deploy some money in it. Whatever money I have left. So I'm being extremely patient. I'm not worried. I think our thesis is right. I think all the conditions are still there. We're just in a pullback, and that's what happens. This is completely normal. It's normal to feel what you're feeling. When things go down, you're going to be concerned. You're going to be seeing negative stuff in your account. I see it the same way too. I was way up, and now it's coming back a little bit. And I'm just patient. And if I can add at better buying opportunities, this is the stage to accumulate on the cheap. And that's what I'm doing. If you guys like this content, give me a thumbs up. Let me know if you guys have any questions below. Please let me know if you guys need anything. If you're worried about your investments, leave some comments. Let me know. Thank you for listening. This is Finding Value.